Chapter 4, Exponential Moving Averages. We're going to really get into the meat and potatoes of what is on my charts. So at this point, you guys should understand the time of day that I'm trading, how I read my charts, and what mindset I need you to be in before we move into the technical aspect of this course. Because going forward, the second I click this button, there's no turning back. We're going deep, we're going all technical, and it's going to be a lot. So get your pen ready, get your paper ready, get your sweatbands on, get your bottle of water, and let's do this thing. What are EMAs? Moving averages, in general, are trend-following technical indicators that smooth out price action over a certain period of time. They're able to filter out price fluctuations to show us the general trend of a currency pair or of a market over time. Exponential moving averages are the ones that we use. The reason for that is because they give more weight to recent prices than simple moving averages. We're day traders in the short term, which means we need the most accurate short-term data possible. Exponential moving averages are always going to give that to us. EMAs also react to recent price changes much quicker than simple moving averages. So again, another reason why you are going to get the quickest data as a day trader with EMAs versus SMAs, simple moving averages. These EMAs, very simply put, are used to define trend, counter trend, and reset. Which EMAs am I using is a very important question that we need to discuss. I use 5 different EMAs all the time. They're always the same colors in all of the photos I'll show you so you can understand very clearly. Also see that you can measure EMAs by period. So we have our shortest EMA is our 8 period and our longest EMA is our 800. In between there, we have our 13, 50, and 200 EMAs that all together will paint the overall trending, counter trending, or reset picture for each currency pair each day. The 8 EMA is yellow. This is always going to be the way it is. In all of my photos, you can see it's very close to candles. It's very close to the price action, and that's because this is our shortest term EMA. This is going to react to prices most quickly. It's the shortest term EMA. It's not an SMA, so it's going to be faster than an SMA, and it's an 8 EMA, not an 800. So it's going to react very quickly, telling us direction in the short term. More specifically, do we get in here? Do we get out here? Should we hold? Should we pull it? That kind of thing. Next, let's add in the 13 EMA. This is always going to be red. Sometimes I might even slip up and call it the ketchup because that's what we used to call it. I used to call the yellow mustard as well, like ketchup and mustard like on a hot dog. I don't know, it's just an easy way to remember it. So again, you can see the red line here, very tight to the candles as well, but not as tight as the 8. Why is that? Well, 13 is a greater value than 8, so it's going to be a little bit slower than that 8. The next EMA that we're going to add in is the 50. Sometimes I'll call this the water. If I do, I apologize. I'm going to try to just call it the 50, but if you hear me reference the water, this is the water. This now clearly has some separation from the 5 and 13 EMA away from the candles, and that's because this is now at a 50 value versus a 13 or an 8. So you're going to be a lot further away, and it's going to react a lot slower as compared to the 13 or the 8. But it's still very important to confirm or to deny the direction of the trend. Next, we're going to add in the 200 EMA, which is always going to be white. Sometimes I might, again, we'll call it a slip up, whatever you want to call it. We'll call it the mayo. Mayonnaise is white, mayo, it's easy. I don't know. Just live with it, all right? I'm a little weird. The mayo is even further away from that 5 and 13, so that should signify to you that this 200 EMA is more important, more significant than those 5 and 13 because it's slower, it's got a higher value, and it's going to react a little bit different than those shorter term EMAs. It's still valuable, but it is not as short term as the 8 and 13. You need to keep that in mind. The 200 is going to react slower. And the same thing applies when we add in the 800 EMA up top here. The 800 EMA, sometimes I'll call it the blueberry. This is the direction of overall trend in that market. No matter what time frame you're looking at, no matter what it is, the 800 EMA, because it's the longest EMA that we have on our charts, will be the overall direction of trading. Meaning, in an example like this, where you have short-term EMAs, 5, 13, 50, and 200, all moving towards that 800 EMA. Candles are moving, EMAs are pointing up, but the 800 EMA is on top. This helps us define a market condition by reading the EMAs exactly how I just explained it. Later in the day, we'll see the EMAs all start to confirm the same direction. That leads us to put it in a different market condition, which may or may not open up a trade for us. I'm trying to be vague and not go into too much detail because we're going to go into it in a second and I want to piece it together for you, but just understand for now. We have the 8 as yellow, the 13 is red, the 50 is light blue, the 200 is white, and the dark blue is your 800 EMA. If candles are above the EMAs, we are in an uptrend. If candles are below the EMAs, we're in a downtrend. And if the candles are converging together, we're in reset. Our 3 market conditions. Write it down. Above the EMAs, uptrend. Below the EMAs, downtrend. Candles converging to EMAs, reset. So we have trend, counter trend, reset. Here's a really good example that you can screenshot, throw this above your trading desk, whatever you want to do. You can see each EMA is labeled nicely. The 13 is labeled red, the 8 is labeled yellow, the 50 is labeled light blue, 200 at white, and 800 at dark blue. If you have any questions on this, please screenshot this, shoot it over to me in the VTF, or shoot me an email, and I would be happy to get you some clarity on this, but I think I'm being pretty clear with it. In fact, here's an example that you can screenshot and test yourself on. Label these EMAs and see if you can remember which color stands for which. And if you're really aggressive, see if you remember the nicknames I gave, and then rewind 5 minutes ago and see if you can remember the nicknames. I'll tell you the first one. The red line is the ketchup, the yellow line is the mustard, the ketchup mustard. Like a hot dog. Come on. Everybody likes hot dogs. So now that you guys have a full understanding of time of day that I'm trading, the different sessions in a day that we can trade, how I read my candlesticks, and how to apply exponential moving averages on your chart, it's time that we really get you into what is going to open the door to the S2 pattern for you. We are going to move into the Trader's Dynamic Index, into the TDI. And in this next chapter, I'm going to show you the entries and exits for the S2 pattern. I'm going to show you what has helped make me and all of our traders on our team profitable traders. It comes directly from this TDI. So again, get off Facebook, no cell phones, pen and paper. Here we go.